Alright folks, today we're going to take a look at a potential seasonal play here in Adobe Systems, Adobe ADBE. And we found this on our Smart Market Scanner, a bearish trade, potential bearish trade to the downside starting on or around July 22nd with a relatively short holding period of about 9 days with an expected close date on or around August 4th. Average profit's been about 3%. 89% win rate over the last 9 years. And you can see the year-by-year breakdown going back to 2011. We had that one losing year there in 2015, although relatively modest. What we want to do is now drill into the chart and see the potential setup. So here we have a daily chart, and we've recently, in last week, we came up and made a new high followed by a large bearish reversal candle. That was there on the 13th. Came up to around the 470 area, rejected hard, and sold back off. Now, we've already had earnings here in June. Next earnings won't be until September, so we don't have to worry about any type of earnings surprises. What I always like to do is go down to a longer term chart, such as a weekly or monthly, to see if we have any space to the right that we can compare price action against us, thus giving us some sort of price structure to look at. As you see, we are at all-time highs. So there's no history to gauge against, i.e. should we reject at this level or that level? It simply does not exist. So we go back to the daily chart and see if we can look for an entry on the lower time frame, here being the daily chart. So we've got a couple of technical patterns in the process here on ADBE. One, we've got a 1, 2, 3 top pattern, a 1, 2, 3. Also add that by putting our 1, 2, 3 top tool here. So you can see we have a 1, 2, 3 top in the making with a suggested short down here below 415. We're also getting a head and shoulders top. So we've got a left shoulder, a neck, head, neck, and then right shoulder potentially in the works. On the head and shoulders top, that would be a break of the neck. A short would be a break of that neckline there at the 415 area. Projected target would be the distance between the head and the neck, or the distance between the one high and the low of the two, if you're looking at it as from a 1, 2, 3 standpoint, and measure down, and that would take us right here to about the 200-day moving average. So that's a move from about 415 down to 355, or about a $50 to $60 move. So a very nice, healthy move. We also have a pretty steep ascending slope here. If you take a trend line and just go from these March lows to where we are today and bracket both the upper and lower bands, we have this large ascending wedge here that lends us to think if we start to break down below here, we're going to start seeing potential moves to the downside. So that's a look at it from a technical perspective. Now, of course, we also want to trade alongside seasonality. It's not a matter of only trading seasonality or only trading technical analysis. What we want to do is combine the two together to put two high probability trading styles or strategies and marry them together for a high probability trading opportunity. So once we start breaking down below and getting that confirmation that the market does indeed want to perhaps roll over, we'll be looking to establish out-of-the-money call credit spreads to take advantage of the move to the downside. So I hope it helps, and we'll see you on the next update.